Welcome to the deep dive. Today, we're jumping into some online commentary that's been mapping out connections between, well, some pretty big financial players.
Right. We're looking at a YouTube transcript, actually, from Marantz, Rantz, and it's called AMC and GME Connect the Dots Private Equity.
Exactly. So the plan is to unpack the links discussed there between firms like KKR, Thomas H. Lee Partners, which is THL, Bain Capital, Citadel, the big ones.
And see how it all might relate to companies people are watching, like AMC and GameStop.
Yeah, and we want to do it without getting lost in super dense financial speak. Just get a clear picture of the relationships being laid out.
Basically, yeah.
Yeah.
Taking this commentator's framework and seeing what this web of connections between these giants looks like.
Where their interests might cross over, what that could mean.
For the companies, for the market, all that.
Okay, so where does it start? The commentary kicks off mentioning distressed credit hedge funds.
Yeah, a list of them. And right away, names like Citadel and Apollo pop up. Funds that invest in companies that are struggling financially.
Distressed credit. So they buy the debt of companies in trouble.
Pretty much. Which, can give them a lot of sway over what happens next, restructuring, maybe even bankruptcy.
Gotcha. But the focus then shifts pretty quickly to Thomas H. Lee, THL. The commentator doesn't sound like a huge fan, but THL's role here seems key.
It really does. Putting THL in this distressed debt space kind of sets the scene for all the other connections that come up later. Their opinion aside, THL being active there is important to the story.
Okay. And then we get some history thrown in. Rothschild family, Drexel Burnham Lambert, like old school finance networks.
Right, establishing that these aren't, new players operating in a vacuum.
But here's where it gets really interesting, I thought. The commentary says Kohlberg, Kravis, and Roberts KKR basically made Thomas H. Lee a billionaire.
Yeah, that's a huge connection right off the bat. KKR playing a role in THL's massive success. That definitely suggests a deep, maybe long-standing relationship.
Absolutely. It sort of anchors KKR right in the middle of this whole thing, doesn't it?
It really does. That initial link, KKR and THL, it's kind of foundational for everything else the commentator discusses.
Yeah.
It implies, maybe shared goals, enduring ties.
Right. And this idea of them all being tangled up together really starts to pick up speed. KKR is mentioned as partnering with both THL and Bain Capital.
Mm-hmm. Working together.
And there's even a suggestion, kind of tentative maybe, that THL, KKR, and Bain might have all been involved with Toys R Us.
Toys R Us. Yeah, that comes up. Even just bringing it up highlights how these private equity firms can be major players when big retailers go through, well, tough times. Restructuring, bankruptcy.
It hints that maybe these firms swim in the same ponds, maybe even work together on deals sometimes.
Exactly. It suggests they operate in similar spaces, potentially collaborating.
Okay, and then to hammer home these connections, there's a point about someone who used to work at Citadel, now has a senior comms job at KKR.
Yeah, that's a concrete link, isn't it?
Yeah.
Seeing people move between these big firms, it points to, shared professional circles, maybe similar ways of thinking or operating.
It's not just abstract connections, it's actual people moving between them.
Right, maybe even some level of, informal understanding between the firms.
And it doesn't stop there. KKR's co-founder, Harris, apparently went to some event with Citadel's Ken Griffin and the Wells Fargo CEO.
Mm-hmm. High-level stuff. Those kinds of meetings just show how close the ties can be at the very top of the financial world. Doesn't mean anything nefarious, but it shows they're definitely connected.
But this next bit seemed, pretty striking. The commentary says Citadel actually owns a $200 million stake in KKR.
Wow, okay. $200 million.
And apparently they've increased that stake recently.
That's true. Well, that's a serious financial tie, wouldn't you say? Much more than just bumping into each other at events. Absolutely. A stake that size points to a pretty strong alignment of interests. And increasing it, that suggests Citadel sees value there, wants to deepen that connection.
And the links just keep piling up. There's mention of a fireside chat between KKR's co-chairman CEO and Ken Griffin.
So public conversations, too. Not just behind closed doors.
Yeah, discussing market, strategy, whatever. It paints a picture of real engagement.
Definitely reinforces that idea of a close relationship, maybe mutual influence.
We also hear about more people moving between Citadel and KKR. Someone from Citadel's Surveyor Capital goes to KKR.
Surveyor Capital, that's like an investment unit within Citadel.
Yeah. And then someone else moves from KKR to Citadel. It's like a revolving door almost.
That back and forth movement really drives home the idea of a shared kind of professional world. Same talent pool, maybe similar strategies. They invest in each other. They hire from each other.
Okay, so the connections are established. Then the commentary moves into actual deals, partnerships, acquisitions.
Right, the tangible stuff.
PHL is mentioned, partnering with Blackstone, the Carlyle Group, Hartman, and KKR, of course. Seems like they team up a lot.
Yeah, that's pretty common in private equity, right? Joining forces on big deals, pooling money and expertise spreads the risk too.
Makes sense. And then KKR and Bain Capital are apparently doing joint fundraising along with Silver Lake.
Ah, Silver Lake enters the picture, another big tech investor.
And the commentator flags that AMC actually borrowed from Silver Lake previously, so another thread connecting back.
Interesting. Yeah, the fundraising shows the scale they operate on, and the Silver Lake link with AMC just adds another layer to this whole web, especially for anyone tracking AMC.
Then actual buyouts. KKR bought 1-800-CONTACTS from THL for like $900 million.
Okay, so they're buying and selling major assets between themselves too, not just partnering.
Yeah, significant businesses changing hands within the circle.
Shows how dynamic it is, constant portfolio adjustments, ongoing business between them.
And their interests seem to overlap even on things outside typical finance, maybe, like KissAR, THL, and Highbridge Capital, and the commentator notes Citadel invested in Highbridge.
Right, Highbridge.
They all apparently bid for the LA Dodgers.
The Dodgers. Huh.
Yeah.
Okay, so that shows them maybe identifying opportunities together, even in sports, which you might not expect, pursuing the same big prize.
And this isn't just recent stuff. Looking back, KKR bought some media company from Bain Capital and THL for almost $4 billion back in 2006.
$3.9 billion, yeah. So these relationships, these kinds of deals, they go way back, decades potentially.
Not just a 2021 phenomenon. Deep roots.
Exactly. Suggest really ingrained connections in the industry.
And that same year, 2006, you had the Carlyle Group, KKR, and THL teaming up to buy Nielsen for $15 billion.
Whoa, Nielsen, that's a massive deal. A classic example of major PE firms pooling resources for a huge leveraged buyout.
Which brings us to leveraged buyouts, LBOs. The commentator mentions that learning about private equity and LBOs really changed their perspective on all these connections.
Right. That seems to be a key filter for how they're interpreting everything. Understanding LBOs shifted their view.
Okay, so just for anyone listening who isn't like totally up on LBOs, can you quickly explain what that is and why it matters here?
Sure. So a leveraged buyout, LBO, it's basically buying a company using a lot of borrowed money. That's the leverage.
Oh.
Often, the company's own assets are used as collateral for the loans.
Okay. Borrowing a ton of money to buy something.
Exactly. And the typical goal is to, restructure the company, maybe make it more profitable, cut costs, whatever, and then sell it later or take it public again, hopefully for a big profit. The company's cash flow is meant to pay down that debt over time.
Right. But the commentator seems to suggest a darker side, like a playbook.
Yeah. The suggestion is that maybe, just maybe, a strategy could involve loading a company up with debt intentionally, which makes it vulnerable, creates an opportunity for these PE firms to swoop in and take control, either through acquiring it cheaply or controlling the debt.
Okay, so intentionally weakening a company with debt to make it ripe for takeover.
That's the potential strategy the commentator seems concerned about.
And they use Art Van, the furniture store, as an example. THL bought it, pushed aggressive expansion.
Right, financed by debt, presumably. And if that expansion doesn't pay off fast enough, the debt load becomes crushing, which really happened with Art Van. Financial distress, bankruptcy.
And here's the kicker, right? Even though THL bought Art Van, the commentary says KKR ended up owning Art Van's debt.
Exactly. That just highlights the interconnectedness again, doesn't it?
Yeah.
One firm owns the company, another owns its debt. They have financial fingers in the same pie, just at different levels.
Wow. Yeah. And the Toys R Us settlement gets mentioned again, maybe as a precedent for how these things shake out.
Right. Another example potentially following a similar pattern.
Then another huge LBO example,
Wow.
Heart Radio, bought in 2006 by Bain Capital and THL together for $27 billion.
Yeah, iHeartRadio, the biggest radio group, again, Bain and THL collaborating on a massive media deal, shows their scale and reach. These LBOs can really reshape entire industries.
And the money keeps flowing between them. KKR apparently set up a $175 million investment facility, like a pool of money.
Yeah, basically a fund set up for specific investments.
And the backers included BlackRock, Highbridge Capital, remember, Citadel's link there, and THL Credit.
So they're all chipping in money for KKR's ventures. It shows how capital moves within these networks. They invest alongside each other, maybe showing shared confidence. It just ties their financial fates closer together.
The commentator even loops in Melvin Capital, tied to Gabe Plotkin, a name people might know from the GameStop saga.
Melvin.
Right.
Apparently, Melvin had a private equity partnership with KKR.
Okay, so that connects this broader PE network right back to specific players involved in the meme stocks situation. Adds another potential angle for people following GameStop.
Speaking of GameStop,
Yeah.
the focus shifts there. William Simon, senior advisor at KKR, was on GameStop's board. Right. Someone with direct KKR ties on the board. The commentator suggests maybe KKR's involvement was aimed at, that overextension strategy again. Like Art Van.
Loading it up with debt or bad strategy.
That seems to be the implication drawn by the commentator. The presence of the KKR advisor raises those questions about influence.
And then Ryan Cohen comes in, the activist investor, and pushes out board members, including those with KKR links. That's framed as like a fight against these established players.
Yeah, Cohen's activism and the board shakeup are definitely key events. The commentator sees it as pushing back against that potential KKR influence.
And the commentary then suggests maybe AMC and Bed Bath & Beyond had or have similar situations, like bad seeds on their boards tied to these same PE firms.
Right, drawing a parallel. Suggesting this might be a pattern, this kind of potential influence across different companies that have been in the spotlight.
That seems to be a major takeaway from the commentator's point of view, doesn't it? That these connections, this LBO playbook, might apply elsewhere.
Absolutely. That seems to be the core argument being built. These relationships aren't isolated. They could be relevant to understanding what's happening at AMC, BBBY, and others.
Okay, shifting gears a bit. SPACs come up, special purpose acquisition companies.
SPACs, the blank check companies.
KKR raised $1.2 billion in a new SPAC back in March 2021, planning to merge with a consumer retail company.
Right, so SPACs are another tool these firms use to deploy capital, take companies public, just another part of their financial toolkit.
But the commentator has a theory that maybe SPACs, especially in 2021, were used to, hide money or obscure dealings, particularly mentioning Citadel's investments.
That's a pretty speculative theory.
Yeah, they point to the huge boom in SPAC IPOs in 2021. There were like over 600 U.S. listed ones, way more than before or since.
The 2021 SPAC boom was definitely a thing, a huge surge in activity. The idea that we use to hide things is, well, one interpretation. What's definitely true is that a lot of companies that went public via SPACs haven't performed well since their mergers.
Right, which hurt a lot of retail investors who bought in.
Exactly. So there's definitely skepticism around SPACs, whether or not they were intentionally used to obscure things.
Okay, then the discussion moves to restructuring advisors and law firms.
The support network, basically.
It mentions AMC lenders hired advisors from Gibson, Dunn, and Crutcher. And the commentator raises an eyebrow because Gibson Dunn also worked with Apollo Management in the past.
Right. So questioning potential conflicts of interest maybe, or just highlighting that the same advisors often work with many of the big players, which is pretty standard for companies in distress. They hire experienced advisors.
And the law firm links get tighter. Gibson Dunn is apparently key counsel for both KKR and Bain Capital.
Okay. So representing multiple major firms in this network.
And people from firms like Gibson Dunn sometimes consult for Bain Capital, too. It seems like the same top law firms pop up again and again.
Well, yeah, high finance is complex. You tend to see a concentration of expertise among a few top-tier law firms that specialize in these kinds of deals.
Yeah.
M&A, private equity, restructuring.
So it's not necessarily suspicious, just how it works.
It could be just that they're the best firms for the job and get hired by everyone. But the commentator clearly sees it as reinforcing the interconnectedness, the potential for aligned interests, even among the advisors.
There's an example of Bain buying Apex Tool. They got advice from Goldman Sachs and Gibson Dunn. Kirkland and Ellis advised Bain too. Just shows all the players involved in one deal.
Exactly. Big deals involved investment banks, multiple law firms. It's a whole ecosystem.
Finally, the commentary touches on the death of Thomas H. Lee, THL's founder,
Right.
and points out that THL's head of communications, Josh Hill, used to be in leadership at Citadel Securities.
Wow. Okay. Another personnel link right up to the end.
Yeah.
Citadel to THL leadership this time. Just keeps reinforcing that people move within this circle.
Yeah. And the commentator found it odd that Lee's death wasn't maybe bigger news, given his role.
That's more of a subjective take, but it highlights how significant THL was or is in the private equity world from the commentator's perspective.
Okay, so let's try and wrap this up. We've basically traced this thread through the commentary, and the same names just keep coming up, right? KKR, THL, Bain Capital, Citadel.
Definitely. They're linked through partnerships, buying companies from each other, people moving between firms, direct investments like Citadel and KKR, even bidding on the same assets like the Dodgers.
It's presented as this really dense network.
Exactly. The picture painted is one where these firms aren't really operating in isolation. They're, well, deeply intertwined.
So for someone listening, why does this matter? Why wade through all these connections?
Well, I think the idea is that understanding these relationships gives you context. If you're following a company like AMC or GameStop, knowing who the major financial players are behind the scenes, who they're connected to, who they partner with, it might change how you interpret news or company actions.
Like the Silver Lake loan to AMC. Knowing Silver Lake sometimes partners with KKR and Bain. It adds a layer, maybe.
Potentially, yeah. It encourages maybe a more critical look. This commentary isn't providing, like, smoking gun proof of anything illegal, but it's highlighting relationships that could suggest shared interests or potential influences.
So it prompts questions, especially around companies that have seen so much drama.
Right. Recognizing these names when they pop up, KKR, THL, Bain, Citadel, might make you think twice. Dig a little deeper into what their involvement could mean.
Okay, so a final thought to leave people with, maybe something like, how much do these dense networks really influence what happens in the market?
Yeah, that's a good one. And how important is it for regular investors to even be aware of all this backroom interconnectedness when they're making decisions?
What does it actually mean when you see the same handful of firms and faces showing up again and again across different deals, different companies, different situations?
It's definitely food for thought, something to mull over as you watch the markets.
Typically. Well, thanks for joining us on this deep dive.